All right. Good morning, everybody. How are you? Welcome to, where did it go? There it is. All right. Welcome to QuantBox Live. It is 6:30 in the morning on Wall Street. Let's get our macro on. QuantBox Live, where we uncover the best fundamental opportunities across the global markets. My name is Wayne McDonald. I'm the founder, also a Harvard educated economist, which means I love trading. I love markets. I love the economic analysis. I love trade planning. I love strategy planning. That's what QuantBox is all about, automating your macroeconomic analysis. But hey, if you're watching this at 11 o'clock in the morning on YouTube, you are hours and hours and hours and hours and hours behind. We're doing this live as a QuantBox community, and you could try that for a whopping $8 trial. With that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Going into the dashboard, you could see the last video was Wednesday the 14th. So today it must be Thursday the 15th. See, I'm pretty good at math, huh? Thursday the 15th, halfway through the June. Holy smokes, we're going to run into a new quarter pretty soon, huh? Getting pretty close to Canada Day, the biggest, most important day of the year for global investors. Let's log into the Pro database. I'll switch my Gmail account to be the appropriate one. And of course, the thing on my mind today is, well, there's a lot actually going on. We have U.S. retail sales coming out. We also have the ECB interest rate decision. China came out with lackluster data yesterday. Oh, and the Fed paused, but they kind of also raised at the same time. So, wow, what an interesting world. But you know what? That gives us opportunity. Okay, that gives us opportunity for investing and trading. So let's do a zoom. Everything is up compared to Bitcoin. Holy smokes. This is why I use a scatter plot, by the way. See, like I can do it this way, and we can look and I'm like, oh yeah, Aussie's up versus the yen by 1%. And you don't get like this idea of scale, if you will, relative to everything else. You're like, oh yeah, Bitcoin's down, gold is down, Aussie yen is up. Good. Well, when we change to a scatter plot, it gives you this idea of scale relative to other assets. Let me pull up a scatter plot. Okay, and you're like, oh my God, wow, Bitcoin way down. Is it? Well, yeah, I suppose the Fed told us that there's probably 2 more rate hikes coming. That will bring dollar strength. Or at least that's what traders and investors would assume in a scenario like that. Okay, and that seems to be happening. Meanwhile, if the dollar's strong, there's a lot of people invest into Bitcoin because they think the dollar's worthless. Well, not today. So they converted their Bitcoin into USD. Okay. Or maybe it's people buying leveraged and they get knocked out because they're being silly. So, anyways, maybe they got stopped out of Hail Mary trades. Nonetheless, that skews our data set. So let's get rid of Bitcoin and reset this. And then the next thing you see is, holy smokes, all the yen pairs are up. Nice. Well, again, if they're in the top right quadrant of the scatter plot, what it's saying is these things were expected to be up quantitatively. So like the S&P 500 is basically flat, but it has a positive score of 2. Kiwi has a positive score of 1, and it's slightly up. Okay. These and these, are higher and higher and higher. So like Euro yen has a QuantBox score of 4, and it's up 1%. Makes sense. CAD yen has a score of 4 and is up almost 1%. So all that makes sense, and everything down here makes sense. A lot of the cross pairs are kind of just a little bit out of position. The stock market's did come down. The DAX came down yesterday. The Dow came down yesterday. Gold came down yesterday. Kind of same story as Bitcoin, where if the Fed is going to raise interest rates and drive down inflation further, then you don't need to hedge inflation. And that's usually the traditional role of gold. So if the Fed's going to drop inflation for you, you don't need to hedge it. So you don't need to own gold. So you buy something else. Okay. We can get rid of these commodities, if you will. Okay. Great, great, great. You can get rid of the indices. Okay. See how we're zooming in? Zoom, 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 zoom. Lots of cross pair kind of stuff going on. Let's get rid of the minors and just look at the majors here. And Kiwi has a QuantBox score of -2, and it's down 0.5%. Pound dollar has a score of -3, and it's basically flat, but negative. So these ones haven't fallen as much, and these might be the opportunities you get today. I would ignore USD Swissy because they're both funding currencies. So therefore, I would look at Aussie dollar, I'd look at euro dollar. The news out of China was bad last night. And so here's the cross currents. They're stimulating. They've recently lowered their RRR, their reserve requirement ratio, which means banks don't have to keep as much cash at the central bank. So they have more cash on their balance sheet, which means they could lend that out, which would be stimulus. But they also lowered interest rates by 0.1%. And, there might be more coming. So here's the thing. The data was bad, so you could sell Aussie dollar, but maybe the hope is so bad that the Central Bank of China has to provide stimulus, which would be really good for Aussie dollar. So you're like, ooh, cross currents. There's now versus later. So you have to pay attention. That's what technical analysis will tell you is which one is happening in the moment, or if you use leading indicators, where it might happen in the near future. So therefore, we could take a look at kind of these pairs. This was the trade plan after the Fed meeting yesterday. Here's the trade plan from last week. Hey, not bad, right? It's not bad. Last week we had it going up, up. Then we hit our technical area, where we kind of think if there are bears in this market, you know, or actually it's the other way around. Whoever bought it here, where will they take profit, right? That's the question. Where will those investors take profit? And that's what this pink zone is. That's the red zone. It's not necessarily bears, it's bulls taking profit. And then the rest was the price action from yesterday. Immediately, the dollar got strong on the Fed announcement. Okay. So what I drew back then was retracement and possible follow through. Okay. Back to 107.5, basically, right? In fact, for those that attended the meeting live, I said, who thinks it'll do it? Okay. And that's why I drew it that way. So, kind of like what, halfway there, the down, the up, the down, and now we're kind of back up here. Okay. So today and tomorrow we'll probably look for something like that. Not that it will happen, but if something like that did happen, this is the technical price in which you would expect that to happen. And then the fundamental difference is, well, the dollar might be strong if the Fed's going to raise 2 more times. Those rate hikes were not priced into the market, so they need to be priced in. Okay. Now, today is Euro risk. The ECB is probably is going to raise interest rates. So, yeah, this might fizzle out. You might get kind of one of the, not just something like this. You might get something like up and then down and then up today. This might be noisy because now you have multiple things going on. So that's where you might want to pick on something else. If you're going to play the Chinese news as negative, QuantBox says this should be going, there's quantitatively, you could consider this plausibly bearish. We know technically it's not bearish, but that's the issue. That's the whole thing. That's the beauty of QuantBox. It's going up. QuantBox says, yeah, I see it. I recognize it. I'm adding that to my quantitative analysis. But don't be shocked if it turns bearish based on economic analysis, in particular, comparative economic analysis. So weak China could weaken the Aussie, and then a hawkish Fed could increase the US dollar. And guess what? What price would a reversal occur? Right here. This is a confluence of monthly and weekly resistance. It's in fact on the 1st of June, okay, way like 2 weeks ago, the 1st of June, this price, 68.40, I can't quite see the exact number, 68, yeah, 68.40 was the conservative projected top of the month of June. So we get there, and now what if it produces a reversal pattern? Well, this is where you'd expect bulls to exit. New China news added to that. Okay. New Fed news added to that. And suddenly you have a confluence of technical and fundamental analysis. And of course, QuantBox, which only analyzes the economic data, says, see? Well, it doesn't actually talk. But, anyways, it's like, yeah. Yeah, it makes sense. China, China's not the China reopening play is not having a dramatic positive effect on the Australian economy. And in fact, if you remember last week, they had negative import and negative export data. Yeah, that's not good for Australia. So, anyways, it's not like I'm not saying this will fall, but if you thought it might, this would be the right price area for that to happen. So now that's how you use QuantBox and technical analysis together. Oh, it is going up, but don't be shocked if in the next 24 to 48 hours, it at least stops going up. We don't know if it'll go down, but at least maybe it stops going up, and then your job technically would be to identify trading opportunities. Okay. Coolio. So that's how to combine the two. I think we got time for one more. I guess we could pull up gold. You guys want to do gold? Again, just kind of looking at how a change, let's do a smaller time frame. How a change in dollar, well, I guess it's not that way. Like the change in interest rate outlook. Okay. We went from virtually no chance of the Fed raising interest rates in July to virtually for sure the Fed's going to raise interest rates in July. That change produces dollar strength usually. Okay. So imagine it as a carry trade. If the Fed is going to raise interest rates 2 more times, if you own the dollar, you're going to get paid to own the dollar, and you're going to get bonuses along the way as they increase the amount you get paid. Some currencies don't pay you anything or pay you hardly anything, right? So a USD yen could get pretty interesting. I mean, in fact, let's not do gold. Let's not do gold. I'm just showing you that when the dollar got strong, so gold came down. But maybe one to keep an eye on would be Aussie yen. So let's take a look at the QB side of it first. So where do you find I meant USD yen. Okay. So where do you find that? USD yen. And oh, an error. Interesting. Screenshot. Snip. Snip. Oh, look, the dot plot. I know, sexy, right? Yeah. All right. Let me. Okay, I got that for later. So, but still, the scoring should still be easily seen. COT favors the US dollar. Retail sentiment favors the US dollar, seasonality favors the US dollar, GDP. So it looks like QuantBox is struggling to read the technicals. Okay, got it. That's it. GDP favors the USD. Inflation's lower in Japan. Unemployment is better in Japan, but interest rates are higher. I mean, 5.35% higher than Japan. But anyways, oh yeah, I see where it's struggling. It's struggling doing the projection. Interesting. All right, so I'll get the guys on it. I'll get the fellas on it. But yeah, look, retail still is very, very short this. Isn't that interesting? And look at this. Institutional investors, 66% are long dollar, which ain't great, but I think this is going to be changing next week. I think you're going to see a big jump. So see this number? This is going to be a positive number next week. Well, actually, you know what? No, there's going to be a lag. That's interesting. So we get this data from the Smart Money Tracker. Okay, Smart Money Tracker comes from the government. The government requires institutional investors to report on Tuesday. So then, and then, it's the government. It takes them 3 days to repost it. Like, why? Because they have to do the math. I just imagine there's some guy there actually doing it with a calculator. You're like, you guys don't have computers? Well, we spent $1 million on this calculator. I'm like, you might have mispaid. Really? Walgreens charge you $1 million? But anyways, it shouldn't take that long. But we get the data. The world gets the data Friday at 4 p.m. That's where this comes from. But the data released on Friday is gathered by the government on Tuesday. But the meaningful information that we need was on Wednesday, which means it won't be in Friday's data. We have to wait a week and a half. Oh my God. But, anyways, I'm going to predict the future. Okay. I'm going to predict the future here, and that demand for dollars is going to go up. So then we go back to here. And so those numbers get reflected here, where in 2 weeks, in 10 days, that's going to be a big up, like no joke, like up 5% or something, right? And so well, now I have to think forward. So this is a computer can't think like a human. So now we're thinking forward. We already know that data is going to be there. So that would put hawkishness here. But nonetheless, I believe institutional investors are going to be even more long the dollar. Probably what, 70, 75%? And they're already short the yen. 80% of institutional. These investors are so large, they're so big, they have such a big trade on. It's required by the government to report the position. That's a big position, don't you think? So, anyways, of course, retail doesn't care about that, and they're going to trade against those institutions. Oh my God. So, anyways, this could get upper thinking forward. So we might want to look for that. And therefore, we take that knowledge and you say, okay, I'm going to add that to my bias. And then we go, I'll just open up a clean chart here. And you just say, up, baby, up. And you're in the business, the beeswax, you're in the business of buying dips, is how you might think about this. Okay. When somebody asks me, hey, so what do you do? Oh, I buy dips on the USD yen. Imagine that's it. What do you do all day? I buy dips on the USD yen. That's all you do? You're like, no, sometimes I jam my stop and take a walk. The rest is vacuuming, right? Yeah, it's cool. It's like British royalty, right? You queen and vacuum all day. So I'll leave it at that. That's how you try to thread all this. That's all fundamentals. Remember, we're trying to do macroeconomic analysis, right? And then do comparative analysis of that macroeconomic data. That's a very difficult thing to do. But luckily, we're accessing all these different databases, pulling things in from all over the world. That's a lot of aggregate data. and then to compare two economies together, like USD and Switzerland, for example, just to suddenly know long and short retail, long and short institutional seasonality, technical trends, all the fundamental analysis, and then comparing them. Oh my God. Well, at least it's automated, huh? Nice. So my next step is, can I teach a computer how to think forward like I just did now for you? And I'm actually doing that as a side project. So keep fingers crossed. Maybe QuantBox. I don't know, later this year, maybe next year. But I'm hiring a data scientist, and he says he can do it. So I have a few more interviews with him. But wouldn't it be cool if it could take all of this and more data that we don't even have? Because this is you get into analysis paralysis, right? A computer doesn't. AI doesn't. Machine learning's like, right? Just think of Neo. I know jujitsu, right? All of a sudden, the machine learning algorithms are going to go, I know macroeconomics. Feed me more, feed me more, feed me more. So I'm going to, one of my things is, okay, this is all the macroeconomic data. But if it analyzed all this and then read about the OPEC global outlook for supply and demand of energy, and then it looked at the IMF global outlook for GDP, and then it looked at the World Bank, and then it looked at the Fed, and then it looked at everything and helped us maybe predict next week, today. Oh, so anyways, that's what I do for fun. So thank you for being subscribers of QuantBox. Uh, the future's here. It's awesome. So peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day. And I'll see you when I see you. Remember, retail sales and ECB next on deck. Be careful. Cheers.